Nothing in this video is financial advice. I am not a financial advisor. I am just a random guy on YouTube. Anything done in this video is not a suggestion for you to buy, hold, or sell any securities in this video, just for educational and informational purposes only. Okay, let's get into it. So today we're going to be talking about why I am not selling covered calls on SOFI. So looking at my portfolio, it's a bit of an overweight position in my portfolio, and I got about 1,900 shares, and my average cost is 1807. Current price is 1856. Now, why am I not selling covered calls on this position? So before we start, you might not know what a covered call is. The gist of it is that you're basically putting a conditional selling order on 100 shares of a stock you own. So let's just take a look at the option chain really quick and take a look at SoFi and see what we're dealing with. So the way to think about it, stock price is 1856. My cost basis is 1807. So anything above 1807 is essentially, I don't want to say like zero risk or risk free, but there's virtually no way you can lose money if you end up letting the shares go above the cost basis. You made money, and then the only really way to like lose money is if the stock goes down, right? So what you're doing is you're placing a conditional selling order. Let's say if I put it for let's go September 18th just to see. So we have, let's say if I set it for $20 strike, that would be it would pay about 80 bucks, right? So basically, conditional selling order at $20 strike, somebody on the other end is buying a call option for that date. So somebody on that end is bullish. And I'm actually extremely bullish on SoFi. So it doesn't really make sense for me to want to sell covered calls right now at this point because I don't want to let go of the shares, right? So you might want to let go of the shares at a certain price. You might just think of SoFi as like quick, easy money. It's a quick trade. You could definitely sell a covered call at 19, at 20, at 21, right? You can buy the shares at 1850, go and flip that, sell a covered call right away. Someone else is paying you a premium. So for example, that $20 call, if somebody pays you 80 bucks, your actual cost basis, if you let it go at 20 bucks a share, you're selling it for 20, plus you get the 80 bucks of premium. Your break even is $20.81 or 20.80. So basically you have to be aligned with your thesis and your conviction with the stock. If I think SoFi is a $30 stock, $40 stock, I might not want to risk selling it too early, right? So it's not just a game of math. People on YouTube teach you the technicals, they teach you the Bollinger Band, which is great. We'll get into actually the Bollinger Band on SoFi, just to show you, what's happening there with some of the technicals. But it's not just math. It's not just seeing the stock, seeing the number and saying, okay, boom, technicals, right? Because, depending on where you're at in life, you might not want to prioritize the income from covered calls in that moment. Okay. So let's just take a look at SoFi Technologies. We're going to look at the Bollinger Band. We're going to take it to, oh yeah, we have to go to chart. Okay. So here we have the Bollinger Band pulled up. For those of you who don't know what the Bollinger Band is, basically it's two standard deviations away from basically what should happen. It kind of gives you this like price range. You can actually set the standard deviation closer to 1 or 3. Um, basically, it's a statistic probability of what should likely happen in a certain time based on, historical data and stuff like that. So right now, you'll see the stock price 1853. It's kind of approaching toward the top of the Bollinger Band, and earnings already happened. So that's actually really good. This is a nice setup for covered calls if you want to trade it, right? Everything looks pretty good. The RSI right about 58, not quite oversold, but kind of in the upper middle of it being, or sorry, I meant not oversold, overbought. Kind of like the upper middle of it being overbought. At a 58, really, if it's about 70 to 80, that's overbought territory. So now, yeah, 6 month price is basically the same. So, this stock has been pretty sideways lately. Um, but past performance does not, mean future performance correlates to that exact thing, right? So it looks good from a technical standpoint, but if you really think the stock is going to 30 bucks, 40 bucks, 50 bucks a share, why would I want to risk at this point selling a covered call on it, right? So now that's one way to look at it. I'm not set in stone. Things might change. This is just right how I'm feeling right now in this moment. I do have a lot of shares of SoFi for my portfolio size. So that could change. I might want to offload one at some point, maybe in the 20s, but that would I would like to ideally hold on to these shares as long as possible. But if I see an opportunity, I'm not set in stone. Things could change. But, so the main point is that you want to be ready to let go of the shares because chasing it up and rolling it up, you can do that for so long, but sometimes it just gets away from you and you can miss out on a lot of upside. So, yeah, selling that covered call would just cap so much upside. Although it is good premium for the time. Um, yeah. Okay. And then, yeah, let's just take a look at SoFi financials a little bit. Just take a quick look. Some of the reasons why I'm super bullish. If you haven't listened to the recent earnings, I would definitely recommend listening to the recent earnings. Also, listen to interviews with Anthony Noto because going in depth, it's not just a numbers game. It's who the heck is running this company, right? You have like such a good CEO running the company, and you get to hear their thoughts, the way they make decisions, right? Some things you just can't quantify with just numbers alone. You know what I mean? So that's a big thing. Um, so yeah, anyway, so let's take a look at the numbers. Roughly this is for, yeah, let's say 2023. It doesn't take a rocket scientist to look at these numbers and see they're trending in the right direction. 2 billion revenue in December 31st, 2023, 2.6 billion 2024, 3.6 billion 2025, 4.3 billion trailing 12 month. Uh yeah, great numbers. Great numbers. And yeah, I mean, year's not over. This company is trending in the right direction. Now let's look here. Um, let's see here. Pre-tax income. It was a loss, 300 million, 2023. Now positive, 230 million, 2024. 525, 2025. 737, right? Like it's just trending in the right direction. Look at this EPS, right? They're investing a lot back into the business. So it's a lot of growth, revenue growth. The EPS, they're choosing, rather than letting the money fall to the bottom line, they're investing in growth. I mean, which bank is growing at 40% revenue growth, 30% EBITDA margins, right? Rule of 40 score of 70, right? The company's just executing very well. So, you know, um, nothing in this life is 100%, right? It's nothing is guaranteed, right? You just make your best bets on the probability. Alex Becker said this once, and it stuck with me, right? If you go to a casino, right, and you bet on red or black on roulette, right? There's a 47.5% chance, you land on red or you land on black, right? And it pays, 1 to 1. But that difference, that hedge, that not hedge, that discrepancy, that's where the casino makes the money, right? Now think of this. What if the probability, let's say that same bet, you bet red or you bet black, but if you lose all your money. But if you win, you 10x your money. right? The probability and the payout, you'll take that bet every day, right? It's just a way to think. I'm not saying go to the casino and gamble, right? Of course. So, but the basically is you put your money in your conviction, and let's say you lose a bet, lose a bet, lose a bet. You win one time, you 10x. I'm not saying that's how you should invest. It's just a way to think about it where, you know, that's kind of the bet you're taking when you have a really good company, right? Um, is you're looking at the probability of, doubling your money, tripling your money over time, quadrupling your money over time, you know? You're just taking those calculated bets and yeah, basically, you just see where it's going, you put all the information together, great CEO, great financials, you use the app yourself. I use the app. I love it. Um, trying to get more in the ecosystem of SoFi. But yeah, it's a great company. They're executing very well. And yeah, you just have to take that bet. Nothing's guaranteed, but that's where I'm putting my money where my mouth is. And recently, a couple days after earnings, they had a pretty good pop. People are realizing, oh yeah, these earnings are actually really good. So, we'll see what happens. This week, yeah, it's up about 10%. Right in this 15, 16. That's kind of where this stock wants to just kind of bottom out. So we'll see. My cost basis is 1807. I have quite a bit of shares of SoFi. We'll see what happens, right? So I'm putting my money where my mouth is, but that's basically why I'm not selling any covered calls on SoFi. Um, so the main lesson here is just if you have a stock that you love, you just gotta hang on to it as long as you can. Selling covered calls is great. I definitely do it. I have covered calls on a few positions right now. But if it's a good company and they execute well, you're going to usually underperform with covered calls. But the thing is, why you do it is because it generates cash flow, right? So, yeah, I have a $90 call on Elf. The stock right now is 88 bucks, and this is before their earnings. So, this is a position, we'll talk about it in another video, that I might think about rolling this one. But had I just held the shares, the stock would just grow and I would have no worries, right? But now if it goes to like 150 bucks, I have to let it go at 90, for example, right? Unless I roll it. There's other ways to manage the position, right? So that's pretty much it. Try to hang on to your great companies as long as possible and have conviction. Um have conviction in what you own, right? So when you have conviction, you could think about it in a way that's not just, it hit this number. Now I have to sell a covered call and now I have to sell it at this one, right? It can be a little bit messy. So it's not just a math game. It's really just understanding what you own and what you want to do and what decisions you want to make with the information that you have. So that's pretty much it. That's why I'm not selling any covered calls on SoFi at this moment. Things could change. Once again, not financial advice. If you got any value out of this video, if you learned something about the thought process of selling covered calls, stocks, how to think about securities, things like that, yeah, drop a like, leave a comment. Would love your feedback, and I will see you in the next video. Peace.